Welcome back to the channel, or welcome to the channel if it's your first time here. My name is Troy, and every Friday, 30 minutes before the open of the US stock market, aka 8 a.m. Central Standard Time, I share with you 5 dividend stocks that you need to know about before the upcoming week. Now, you might be wondering, how does a stock even get on the list to be considered for this week's video? Well, the first requirement is those stocks need to have an ex-dividend date of this coming week, which in this case is June 17th through June 21st, which 107 stocks qualified for. Then I asked those stocks to have a dividend streak of at least 5 years to show stability and consistency in paying and growing their dividend, in which 31 stocks qualified for. And the final filter before I narrow it down further is outperformance of the market over a decent period of time, which only 11 or 10.28% of the original list was able to complete. Now, my ultimate hope for these videos that I release every Friday is that I can outline some great stocks that you can do additional research on to see if any of them or all of them possibly fit the needs of your portfolio. If that sounds like a plan to you, make sure you consider subscribing to the channel for other content just like this and other very exciting dividend content in the works. But now let's go ahead and dive into number 5 on this week's list, the stock you need to know about, Best Buy, stock ticker BBY. Best Buy is a quarterly payer in the consumer discretionary sector, paying $3.76 per share per year with a forward dividend yield of 4.28%. Best Buy's been paying and growing their dividend over the last 21 years. They have a 3-year dividend growth rate of 16.34%, a 5-year dividend growth rate of 14.87%, and a payout ratio of 56.13%. At the time of recording, Best Buy was trading 1.21% off of their 52-week high. They have an ex-dividend date of June 20th with a payout date of July 11th. And looking at this chart right here, you'll be able to see the growth of $10,000 both with and without dividends being reinvested. Best Buy would have turned $10,000 only reinvesting the dividends into $42,559.76, whereas the S&P 500 over the same time frame with the same requirements would have turned $10K into $32,686.43. That is $9,873.33 on the side of Best Buy. Down here at the bottom, we have that same 10K, this time not reinvesting those dividends, where Best Buy would have turned into $37,907.10. The S&P would have turned into $30,029.70, which means Best Buy would have outperformed by $7,877.40. And the difference between reinvesting and not reinvesting those dividends into Best Buy was $4,652.66. And coming in at number 4 on the stocks you need to know about list is Amphenol. I think I said that right. Stock ticker APH. Amphenol is a quarterly payer in the technology sector, paying 88 cents per share per year with a forward dividend yield of 0.67%. Now, Amphenol has been paying and growing their dividend over the last 13 years. They have a 3-year dividend growth rate of 16.79%, a 5-year dividend growth rate of 13.34%, and a payout ratio of 22.59%. At the time of recording, Amphenol was trading 5.74% off of their 52-week high. They have an ex-dividend date of June 18th with a payout date of July 10th. And again, we have the same chart here, but Amphenol would have turned 10K into $58,623.36, which is $25,936.93 better than the S&P 500. Amphenol, without reinvesting those dividends, still would have brought back $55,273.22, outperforming the S&P 500 by $25,243.52. And the difference between reinvesting and not reinvesting those dividends was $3,350.14. Coming in at number 3 is another name I can't say, so we're going to go with Plute Group, stock ticker PHM. PHM is a quarterly payer in the consumer discretionary sector, paying 80 cents per share per year with a forward dividend yield of 0.72%. Plute Group has been paying and growing their dividend over the last 7 years. They have a 3-year dividend growth rate of 11.46%, a 5-year dividend growth rate of 12.48%, and a payout ratio you love to see of 5.73%. At the time of recording, PHM was actually trading 9.11% off of their 52-week high. They have an ex-dividend date of June 18th with a payout date of July 2nd. And again, same chart. 10K would have turned into $63,146.27, outperforming the S&P 500 by $30,459.84. 10K without reinvesting the dividends would have turned into $57,406.47, outperforming the S&P 500 by $27,376.77. And the difference between reinvesting and not reinvesting those dividends was $5,739.80. And we're a little bit over halfway through this week's video. If you guys haven't already, already, make sure you click that like button as it helps my channel. Don't forget to leave a comment down below. I want to know if you own any of these stocks mentioned in today's video and how they're doing for you. And if you don't own any of them, which ones look the most interesting. But now let's get to number 2. Coming in at that second spot is Vistra, stock ticker VST. Now VST is a quarterly payer in the utility sector, paying 87 cents per share per year with a forward dividend yield of 1.02%. VST has been paying and growing this dividend over the last 6 years. They have a 3-year dividend growth rate of 14.73%, a 5-year dividend growth rate of 46.31%, and a payout ratio of 14.2%. At the time of recording, Vistra was trading 20.67% off of their 52-week high. They have an ex-dividend date of June 18th with a payout date of June 28th. And this one actually only has 7.68 years worth of history, but the returns are actually in line with all the other stocks I'm mentioning with 10 years worth of history. So a $10K investment into VST with reinvesting your dividends would have still brought back $73,840.17, which outperforms the S&P 500 by $45,657.86. The 10K without reinvesting those dividends, still 7.68 years ago, would have still brought back $58,560.39, still outperforming the S&P 500 by $31,801.35, and the difference between reinvesting and not reinvesting those dividends was $15,279.78. And the moment you've all been waiting for, the number one stock that you must know about coming in the next week is Lam Research, stock ticker LRCX. Now, Lam Research is a quarterly payer in the technology sector, paying $8 per share per year with a forward dividend yield of 0.83%. Lam Research has been paying and growing this dividend over the past 10 years. They have a 3-year dividend growth rate of 15.23%, a 5-year dividend growth rate of 11.92%, and a payout ratio of 21.96%. Now, at the time of recording, Lam Research was trading 4.43% off of their 52-week high. They have an ex-dividend date of June 18th with a payout date of July 10th. And here is where this one really took the cake and separated itself this week. A $10,000 investment back to 10 years ago with reinvesting the dividends into Lam Research would have brought back $170,990.69, outperforming the S&P 500 by a measly $138,304.26. The 10K without reinvesting your dividends still would have brought back $154,145.65, again, crushing the S&P 500 by $124,115.95, and the difference between reinvesting and not reinvesting those dividends into LRCX over the past 10 years was $16,845.04. Now, with that being said, let me know how many of these stocks you own, how many of them are completely new to you and you're hearing about them for the first time, and how many of them deserve a deeper dive. Let me know in the comments down below. And if you haven't already, YouTube really thinks you need to check out this video. But until next time, see ya.